It's a big day over in Kenya this afternoon with the MPC out with its interest rates decision. The market largely anticipating a hold at 6%. What are you forecasting on that front?
Thanks a lot. Well, we really don't expect much of a change from the previous. We saw the MPC cut, the last meeting they had this in July, they cut the CBR by 75 basis points. Well, we don't expect much change from that. We don't expect the MPC to cut it further because it still wants to give the previous cut some time to have an effect in the market, because we've seen financials, they've not brought down their lending rates.
The question is, George, just how much time? Because banks over in Kenya have been pretty resistant to lowering their rates. Yes, we have seen a few of them coming to the fore with slight decreases, but this still remains a very big problem when it comes to easing up the credit lines in the country.
Well, if you look at the loan books of financials, look at the loan books, the loan books, they lend them at a very high rate. Well, if they cut it down, if they were to take a nosedive, cut down the rates as the CPK is indicating, well, it will cut down significantly on their margin. Looking at the lending rates and the deposit rates are pretty much going higher. Well, they can't just cut it like that. They'll probably tell you that, hey, we have to exhaust our current loan book before we can bring it down. It's a question of just keeping up the top line.
Of course, this in a context where we've got a market that's eagerly anticipating numbers for the third quarter out of these banks. So what are your broad expectations on that front? Are you bullish in terms of the kind of numbers we could see coming to the fore?
I beg your pardon, take that again.
Just looking at the banking earnings season, what are you forecasting in that regard?
Well, taking cue from Q2 performance, I mean the first half of the year, banks registered double-digit growth, and we pretty much expect the same performance. We are seeing most banks, the major financials, I mean the quoted financials, they got to report strong growth. You look at the environment, the liquidity is too high. If you look at the interbank, the LIBOR rates, it's really low, at all-time low, just implying that there's a lot of liquidity around, and banks are looking to grow their loan books at an alarming rate. I mean, we pretty see some banks still registering double-digit growth. And there's a lot of speculation around that. If you look at the stock exchange, the financial are pretty outperforming even the industrials and the commercials. It's about the positive sentiments that are being generated around the Q3 performance. We project very good performance.
Let's get your view on a couple of counters specifically. I mean, Equity Bank sitting at 25 shillings 50. It's returned 84% over the past 12 months, and at these levels sitting at 2-year highs. What are you making of Equity Bank right now?
It's a very good bank, strong long-term fundamentals, very stable. If you look at the capital base, the core capital ratios are pretty much stable. I think when I last attended the investor briefing for the half-year results, I remember the CEO saying that the bank is quite literally stable. They're looking to grow the loan book, and if you look at, they're trying to specialize now into the SME business. They're pretty coming out of the low-end market, going to SME business, asset financing and LPO financing. Looking at Q3, I mean, interest income and non-interest income, very great figures, very impressive.
Well, we know, of course, that targeting that lower end of the market has been a strategy that's worked for Equity Bank in the past. Of course, that's just one of the banks we'll be keeping an eye on moving forward.